Hello guys, Jonathan is my name, and here in this video I want to teach you how you can take advantage of the entry and exit points when trading. Now, if you master this art of entering trades at the right time, you're going to make a lot of money. And if you fail to learn this at the right time, you will continue to blow your account again and again, even as an experienced trader. All right. So if you're coming into trading, I want you to pay a very good attention to what I'm about to share with you today. Okay. The entry and exit point simply means when you enter the trade and when you should exit the trade. And there are three things that you should take note of. Okay. Three basic things that I'm going to be talking about, which would determine when to enter trade or when to exit them. The number one here is the trend. Market trend has to do with whether we are in a bullish or a bearish movement. Say we have something like this. Okay, let me change this. Sorry. Okay. Say we are in, say there is a price movements like this. We have this. You can tell that the price is falling, and this is what we call the bearish trend. Okay, this is bearish. And when the price is going the other way, say like this, making a higher high gradually, we refer to this as the bullish trend or the bull. All right, now if you let me put this here to get us when it is going up. Now, how do you make your entries or your exits in a bearish trend or a bullish trend? You check out for the next resistance or support level for that trend. There is always an end to every trend, which means if we start a particular journey from this point, there is a point where we would have to rest or take a break. And this is so applicable to trading, right? So if you see an uptrend, there is a point where it is going to rest. There is an end point for that uptrend, and there is an end point for a downtrend. How to identify this is to check out for a strong resistance level or a strong support level. This would help you in your entry and your exit points. How do you check out for that? Number one, you check out for the previous action. Say before we got to this point and fell off to this here. Let's say the price moved from here, and we had something like this previously. Now we tested this point and went up here, then we went into the bearish movements. What you would want to do is identify this support level. Okay, support level is the point where the price is held from going down. You would understand that at several intervals, the price comes down to test this level and it is pushed back up, just like we have here. All right, and we are coming back to that support level here. This is a support level. Support. All right, we are coming back to this support level, which is ending this trend. You can see a bearish trend or a downtrend. Okay, downtrend. A bearish or a downtrend testing back a support level tells you there is possibly going to be a reversal in price, and when it gets to the support level, which is assumed to be a strong support level, you would want to check out for some things before you make a proper buying or selling at that point. Now, these three things do not exist alone. You would have to consider either one, two, or three of them before going into trade, and I am going to explain how to use all of that. Now, this is your buy or your sell point. What would determine whether you'll be buying or you'll be selling at this point is whether it is going to print a reversal candle, or you are going to get a reversal signal. All right, I would explain that in the third point here. Okay, now this is the bullish trend, which is the uptrend. Okay, the price is going up, and like I said, this is the support level. When it goes up, what stops the price from going further above is called resistance. So when it hits a strong resistance level, which marks the end of the trend, you can say, okay, we are going to have a retracement, or if it breaks out of that resistance, we are going to have, a more bullish movement. So just like we have here, say before we went this high, there was something like this. We had this, yep. So this point now becomes resistance level. You can see this would be resistance level. This is your resistance, which holds the price from going above and pushes it down. Okay, now we are coming to test this on a bullish trend, which is going to end this trend. So if we are ending this trend on a strong resistance level, then we would possibly get a fallback, and this tells when to sell, this tells when to exit, this tells when to go out of the market. Here we are coming down to test a strong support level, which gives a signal of a reversal, which is going to be an up movement. It is a sign to buy, it is a sign to enter the market. Okay, now remember I said you would have to make some other confirmation just to be sure that we are going to reverse at this point or at this point. The second thing that you would want to take note of when trying to get an entry on or an exit point is the time frame. And to do this, okay, let me make that subheading here. Time frame. Okay, so now this part I just explained is for the trend. Okay, the trend or the markets. Let me make this simpler for you. Okay, so we'll have the time frame here. Okay, for time frame, if you want to analyze the charts, you would have to navigate between the 1 hour, 30 minutes, 5 minutes. Some of us even use 1 minute, and well, I'm going to talk about that later. The time frame you would want to use to get a proper analysis is the 4 hours, the 1 day, 1 week, 1 month. Okay, it is very advisable that you check into the future, and the higher time frame helps you understand what will happen in the future. Remember, the higher time frame controls what happens in the markets for short periods of time. Like if the 1 minute is saying we would go up, and 5 minutes tells you that it is coming down, right? It would likely fall down because the 5 minutes says so. And smaller time frame, obeys what the higher time frame says. Let me show us this. Let's say this is the 4 hours, candle chart analysis, 4 hours, and what we see is, let's say, an up trend. Okay, take note of this, please. This small retracement. Now, when you check this on the 5 minutes or 15 minutes, it is going to look like this. Let's say 5 minutes. It is going to be like this. Okay, we have this. Okay. Now, if you agree with me, this might be, even longer. Okay, but because of what you have here, the 5 minutes is going to make it so bold that you would think the price is dumping. And as you can see here, it is really falling down, whereas in the 4 hours, it is just a normal retracement. It shows that there is a normal retracement in price before another move. Now, this can actually turn out to, go up. This chart is, absolutely bullish, but here this is bearish because it has crossed, this point. And when you say it has broken out of your small support and you want to start shorting or you want to sell at this point, there is every possibility that we would, have a retracement here, which tells this is not a sell signal. Okay, it is actually a buy signal. So you would want to check out for a higher time frame, and this is one way to get your entry and exit point. Like I mentioned earlier, you would want to always use higher time frame to get your entry. Sorry, use the higher time frame to get your analysis. You check out what the market is going to do generally in 1 day, in 1 week, in 4 hours, then when you want to enter the price or when you want to enter the market, you use the smaller time frame. And I'm going to explain that right now. How do I enter the market or exit the market using the 5 minutes or the 15 minutes? Okay, let me use this also as an example. If I see something like this and it is retracing, I see that on the 4 hours candlestick, it is retracing. What I want to do is quickly rush to the 5 minutes or 10 minutes, even 15 minutes or 1 hour to see how this retracement is going to play. Where is the next support level on a lower time frame? Now, let's say there is a support level here on the 5 minutes, and there is also another support level here on the 5 minutes. Remember, on the 4 hours, we are seeing that there is a little retracement that will happen in the market. What I will do for the 5 minutes is wait for it. When it breaks down out of this support level, I would wait for it, check out if it will break down this support level. When it does, I would wait for it and see whether it will break down or break out of this support level. When it refuses or when the price is held at this support level, let's say I see an indication that this support level is going to help hold the market, and we begin to see some kind of retracement, like this. This point is where I take my entry because I would possibly get this to play. Okay, so this will tell you when to buy or when to sell. The smaller time frame will give you a clear picture of what the market is doing in this small time, so that when you amplify it or when you multiply what the actions here is, it will give you the the overall market price. So for the higher time frame, you check the general market analysis, and for the lower time frame, you check for your entry point. How is it retracing? Are we coming to retrace? Are we retracing back to this support or the next support? You have to monitor your charts and make that decision. All right. Then thirdly, which is the indicators. I'm just going to divide this here. Okay. Indicators. Okay. There's an S here. So under the indicators, you would have to learn some kind of trading indicators. We have a lot of them, like the RSI, we have the MACD, we have the, what's it called, the volume, and a lot of them, we have the Bollinger Band, Bull, and the rest. I have this series about these indicators. You would want to check out my channel, check my profile, and you would see under my indicators I have talked about most of these guys, so you would get a better picture. Now here you can also add the candlesticks. candlesticks. This is key, please. Okay, candlesticks. In fact, when analyzing your patterns, your candlestick patterns or the charts, you would want to first of all know candlesticks, individual candlesticks, like the reversal pattern, which is very, very important. Now, if you know the reversal patterns, the reversal candlestick, you would be expecting them to come out or show forth at every resistance or support level to mark your analysis or to confirm your analysis. This is one way to use your indicators to get the right entry. When there is a downtrend, for example, so we have something like this, and this is a support level. Now, at this support level, let's say you get doji here, which is a reversal candlestick. Okay, this candlestick tells that we are going to have a retracement. Why? This is a downtrend. Okay, and on a strong support level, it has painted a reversal candlestick, which is a doji. So this would help you tell there is going to be a reversal in price. Okay, and if there are a lot of them, you just want to study the candlestick and their patterns. There is also hanging man. I think I made a video about candlestick also. You would want to check out the video and learn as much as you can. Now, the RSI here gives the number of buys and sell, whether it is overpriced or whether it is underpriced. So when you check that at a downtrend, the RSI is reading oversold or underpriced. It tells, okay, volume will come soon, or buyers will come into the market soon, and from those points you can begin to prepare for your up retracements or your bullish retracement. So this is one way to use indicators, use the time frame, use the trend for the markets, and get a better entry and exit point. Yes, like I mentioned, if you master this exit and entry points, especially for your time frame analysis, your trend and indicators, it would help you better your trade. Thank you very much. If this video was helpful, which I believe it is, don't forget to give this video a thumbs up, and of course subscribe to my channel and be part of this family. Thank you, and thank you for watching.